Okay, so here's the CFTC data for the week ending December 9th. Randy, just jump in if I'm giving bad information here. I did spend some time on it, but you never know. And during this 5-day period where the market went from one price to another sideways lower, from 4,200 closing at about 4,200. So on the week, it's actually technically a little bit higher. Let's call it unchanged. On the week, the open interest went up, and it went up 10, 12, 13, 14, about 15,000 contracts. Now, during that time frame, the bullion banks got short. So they were acting normal. Can you guys see that picture? I mean, is it showing up on your screen? That's what I want to know.
Yes, a little
Okay,
smallish,
good.
but
Yeah, I know. I just want to make sure that it's actually showing in the window. It is what it is.
there you go.
Okay, so on the week, with the market sideways, trading sideways all week with spikes higher, then settling possibly up maybe $10. Swap dealers got shorter 7,200. This is before the rally, before the last re-rally. Longs got long 3,200, and other reportables, we'll call those macro discretionary and et cetera, got longer 7,000. So the funds got long. The banks sold it to them. And the market went up right afterwards. The banks making markets are just not making money now. I mean, they're not. Anytime they're opening positions, they're getting run over. That's my first observation. The second one is on the week, there's still not a lot of options activity, but I don't know if that's because of them or because of the people playing. But the more important development is when I zoomed out to the bigger picture stuff. Now, before I do that, does anyone have any questions about what we just saw? Jesus. Still, people are still coming in.
Anyway, the bone to have.
I'm definitely at the Peter principle here. I don't know what I'm doing anymore. All right, so that's the market. Does anybody have any questions about what we just did? There's really not a lot to go on because it's 2 weeks old, and we're going to get more out of the open interest, which thankfully Randy has been keeping up on. I have as well, but he's got a nice spreadsheet for it. All right, so if no questions, I'm going to go to it. Here's the open interest with some cursory marks. Now, the shutdown is labeled in that little thin rectangle at the bottom from October 1st to November 12th, I believe. All right, so let me open up the chat here so I can see what's going on. Yeah, Leah, that's right. What did tactically add? I'm not telling you to go out and buy. I know that. I'm just saying you now have a place that you can get it. Hopefully at a better. Most of the people here get them at good prices, so you may not even need the guy. Anyway, Merry Christmas, Jake. Merry Christmas, everyone. Okay, so here we go. This is the shutdown of the open interest. Before the shutdown, the market was more or less behaving normally. Open interest would go up with the market going up. Open interest would go down with the market going down. During the shutdown, not exclusive to the shutdown, but during the shutdown, you had a market change in behavior. And you had open interest coming in throughout the whole time period. And you also had the market rallying for about half the time period and then selling off for the other half. And then the market went back to what you could call normal behavior, right? So let me show you what this looks like. All right, so the market rallies, open interest comes in. Then the market sells off, and open interest keeps coming in. Notice how it's coming in very orderly fashion, almost like it's scheduled. That's my comment, my opinion. What happened up here that the market sold off? There was a news item. Does anybody know? No? Okay. All right. That needs to be looked at. Now, after the shutdown,
It's Iggy. The big news item that week when all that stuff came in was the shortage of silver that was going on in India with the LBMA unable to deliver the
right. But that precipitated the gold sell-off. I know people would sell gold to buy silver during that time frame, but are you
well,
saying
suffice it to say the whole beginning of October was that, and then on Thursday night at say 8 p.m. Of that week, I think it was like the 14th of October,
right?
is when that crash came in, and they did it like the moment that China opened up, like the exact moment on. So it was a Thursday night for me, and
Oh yeah,
I looked into it a little bit. Anyway, that's when they crashed it down on that Thursday, and I think they let it come back up on Monday or something, and then crashed it down again, something along
right.
those lines. That's how I recall it.
Yeah. Everything got slammed, and silver went back up, but gold did, something like that. All right, thank you. So after the shutdown's over, you have the market dropping with open interest coming in. You have the market rallying with open interest coming in. So this whole area here, net is open interest coming in with the market rallying, right? But this area here is particularly interesting. And I'd seen that before. And I don't mean historically, I mean in a report that I just saw. So let me find that. So here's the pattern just being shown again. Up, down. You know, this whole behavior is normal, and this behavior is not normal. You could say that this is normal because the market's dropping and open interest is dropping, but it's not. And I'll show you why in a second. And this is the market rallying and open interest coming in again. So what do you have here? During these red arrow areas, you have the bullion banks covering shorts. So who are they buying from? And why were they covering shorts? That's the question during this time frame. I'm more interested in this question, right? And
Oh, fuck.
I'm sorry, what?
Nothing, sorry.
All right, and I got my answer. So here we go. During that same time frame, this is not my chart. Central bank buying ramped up. So central bank buyers, it's the Goldman chart, bought in the rally, same chart. Central banks bought all the way up and all the way down. Okay, so central banks, remember when I started saying they're getting very price inelastic? Well, this is when it happened. This is where the price inelasticity started, and gold rallied during that time frame. So if you put all these things together, During the shutdown, call it a coincidence, during this shutdown right here, central banks bought gold, bullion banks covered shorts, and the market screamed higher. That sound a little bit weird to anyone? Well, it is weird. And I'm going to go through a couple things that'll give you some perspective on what's weird. Here's some comments that I made that we're going to go through a little bit here. I would not be surprised if the bullion banks did not lose money here. So it looks like they lost money during this time frame, but I would not be surprised if they did not lose money. If the BIS was involved, then this would happen. Now, this is going to sound very tinfoil hatty, but I'll give you an example. Why would the bullion banks be covering shorts in a rallying market unless they had the buy order as well? They were buying for the central banks or handling central bank buying as agency or principal. Is Scott here? No? All right.
Hi, Vince. Can you hear me?
Yeah, you can hear me, right?
Yeah, I can't talk much today. I'm in a public place, but
Okay, fine. Fair enough.
I'm here. Cheers,
As
bud.
long
Bye.
as you can listen. All right. Okay. So during the shutdown, central banks decided to buy with the market at all-time highs. I mean, look at this. The market's at all-time highs here. And central banks buy at all-time highs, driving it up to here. And I would assume they bought dips as well. During this time frame, the bullion banks also cover. Now, if you're a technician, you can see that we have a nice trend here. And we have not a bubble, but a distortion of a lot of activity during the shutdown. So I'm going to go through some, I don't have anything earth-shattering to say, but I will share something with you now that I know that they were doing from my own experience. When a central bank wants to buy gold, he's what's called a sincere player. So when he calls up and he gets a market, if he has a very big order, the market maker, in this case the bullion bank, will ask for a little time to work on the order. So the order goes from being, I'm trading with you and just buying from you, to, listen, I have a big order. I'm your best customer. Don't front run me. Take your time. Get it filled. And so the order goes from being an agency order, a principal order, where the market maker, the bullion bank, is taking the other side of the central bank, to the bullion bank handling the order for the central bank. Do you understand that? Now I'll give you real life examples of that. When I was on the floor, I was an options market maker. And as an options market maker, my trades were basically volatility arbitrage. And part of volatility arbitrage is trading the option against trading the future. So a broker would step into the ring and he would say, and usually it would be a very exotic or very delta-oriented trade. So a collar, a risk reversal, a three-way, those words mean nothing. What they mean is that each contract, each structure had many futures attached to it. It wasn't like buying a small call. It was like buying it in the money call or selling it in the money call, depending on how you look at it. And when a broker, a good broker, got an order from one of his better customers, he would tell us it's one of his better customers. Literally, he'd say, guys, this is one of my good customers. Don't fuck around. And as a group, we weren't a cartel, but there was definitely a follow the leader mentality there, alpha, beta type of thing. And you would get a guy to set the tone for the broker, and everyone would join it. So the crowd would kind of agree with each other. And the broker would then say, all right, I have 10,000 of these to buy, which is a lot. I have 20,000 of these to buy. I mean, it was never that big, but it could have been. I have 5,000 of these to buy. Now, typically, when you have an order that big as a good broker, when you address the ring, which is essentially how the over-the-counter market operates, you address the ring and say, okay, guys, make me a market in the 4,000 synthetic put. Okay, like what the hell is that, right? Exactly. So you have to do a lot of math, and you have your models doing it for you. And then you start, and the guy says, I'm a buyer at this price, and I'll tell you the price of the option. So let's say he says I'm a buyer of, let's make it something simple. I'm a buyer of the 4,000 call with the market trading 4,300. The market's moving around, and he says 4,000 call, and we make a market 55 bid at 65. The number doesn't matter. And he says, fine, I'm not going to buy it at 65 from you. I'll buy it in the middle. 55 is the lowest price that he would pay. 65 is the highest price that we would sell. And the broker says, fine, I'll bid in the middle. And we would say to him, not all at once, we would say, you're close. If the market downticks 5 cents, I will sell some of these. Meaning, we're going to sell these contingent on the next ticks. His buyer doesn't care about the next wiggles or waggles. He's just a long-term bull. So the broker would say, okay, and here's the terminology, you can lean on me. Meaning, I did this a lot. The broker would say, how are you on this, Vince? And I'd say, I'm 55, 65. He goes, I have interest in the middle, which means I'll buy it at 60. And I go, let me check to see if I can get my futures. And so we would check the market, and the market was, let's say, the futures were, let's say, 2 ticks above or below, 2 ticks above where I would do it. So it's a delta, right? If the delta is, let's say, 50 delta, a 2-tick drop in the futures is a 1-tick drop in the options value. And I would trade it for theoretical purposes. So let's say I had the option worth 59, right? And I said the market's 55, 65, and he said I'm 60 bid. Well, that's a tick of money over 59, 60 that I can make theoretically if I were to sell it at 60 and I have it worth 59 and I do other things against it to manage my risk. It's kind of like you're playing the over-under in football plus the point spread. You're doing all these three-dimensional gambling things, but it's very transactional, very high volume. Now, the thing is, you're like, well, what's a tick? That's stupid. It's only $10. Yeah, but if I did 5,000 of them, it's $50,000. And so these orders are something you want to do in size. But in order to do them in size, you need the futures to do what you want them to do. And that's to just drop 2 ticks. I need the market to drop 2 ticks. And so you would put your order in the ring, in the futures ring, saying, I'll be 8 bid for 200, something like that. And so the guy on the ring edge who's giving you the signals, he's working your order. So you're like, I'm 8 bid. So the expression would be, I'm 8 bid for 50, right? So that, you'd say that to the guy and he'd say, check, I'm working 8 bid for 50. And he would turn around to the futures broker and say, hey, you're 8 bid for 50. So now I'm watching the broker with the options order out of one eye. And I'm watching my clerk on the ring with the other eye. The clerk on the ring with the other eye would say to me, you're filled, meaning you got your futures. So I'm pre-hedging. I pre-hedge and then sell the calls. And that's how you would do it, because what you're doing is you're getting the customer filled for the broker. He looks good. He's not paying too high. You're getting your minuscule profits, theoretic profits, but minuscule, but they're profits. And the market is stable. The market's not running away from him, right? The broker, had he butchered the order, would have said, how are you? And I would have said 55, 65. And he would have said, buy it at 65, right? I would have made a lot of money, but I would have me and everyone else would have just hit the ring with a lot of futures, and the market would run up and the guy would not get a good fill. So everyone gets hurt in that instance, almost everyone. Now, the reason I gave you such a detailed explanation of that is because in this little scenario that I just described to you, the broker has a customer, and the customer gave him an options order. And the broker is using due diligence to do the best he can for the customer without destroying me, because we are a frenemy situation. He needs me to service his customers, but he hates me because I'm a negotiator. So it's a haggle, right? So he goes 55, I go 55, 65. He goes 60 bid. And I go, I'm going to be honest with you. I can sell 60s if the market does this. And the broker has that information. And in exchange for that information, he says, you can lean on me, meaning I won't make the order disappear without telling you. A lot of times brokers will just say, I'm 60 bid. And then you wait a minute and you go sold, and they go, I'm not bidding anymore. So that's how they protect their customers. Now, this scenario, now that I've gone through it again, I want you to look at it from the central bank, bullion bank perspective. The central bank is the central bank. That's the customer on the phone. The broker is the BIS. The Bank of International Settlements is a bank of banks. They're the hub of central banks. Do they handle every central bank's order? No. But do they handle the big ones? Yes. Because the customer calls up, the central bank, I should say, calls up the broker and says, I have a big order. I need to get it filled. Can you assure me of no transparency and no leakage and an orderly fill? And the broker says, yes, let me check with the guys. And now in this scenario, the customer on the phone is the central bank. The broker is the BIS. And I am the bullion bank. See how that works? We have a frenemy relationship. He knows if he runs me over, meaning if he just destroys me and I can't get filled, what'll happen is he'll lose me. I'll put him in the penalty box and he'll never be able to operate again. I'll ruin his business for a time period until we get even. And he has to get along with us. So picture this analogy of the central bank calling the Bank of International Settlements or his broker, doesn't matter, but the Bank of International Settlements is a broker in this respect. His broker could be someone at the bullion bank. He calls up and he says, I have to buy 5,000 contracts and I need them now. The broker then asks the customer, the broker or the BIS says, do I have your discretion or permission to share some of this information with bullion traders of integrity that will give me honest markets and not flake meaning run away? And he'll say, yes, be careful with who you tell it to, but I will let you leak some information provided it's going to get me a fill. If you screw up, I will never use you again. And the broker, the BIS, says, fine. What does he do? He calls up over the counter the 5 biggest bullion banks or the 4 biggest bullion banks. And that would be in the ring, the broker would point to the ring and say, Vince, Susquehanna, CRT, Cooper, Neff. Give me a market of this. Okay, what's your volume? I could do 200, 500, 300. Okay, so I could do 1,000 contracts from you 4 guys? Yes. And then we all get together, and we don't necessarily get together, but I'll say, the broker that I did this a lot with was named Iron. I'll say, Billy, his name is Billy. I say, Billy, my market is good unless the market trades above here in the futures. So you know that you can lean on me. And he'd say, fine, my order will be here. If you can get your futures lower, then I will bid 60. And he's like, fine. So a good broker, in this case, Billy, would also know that if I was losing money that day, he would try not to bother me. If he did bother me, he would, you could see it on our faces in the ring. If he did bother me, he would make sure that he didn't run me over. Now, I'll go back to the BIS again. The central bank calls the broker. The broker is the BIS. The BIS says, I'll handle the order. Do I have some discretion? Yes, you do. All right. I'll call my best banks, the ones that don't talk about it, the ones that get the order done. And the banks say, what do you want? This is over the counter. What do you want? So I need a quote in 5,000 contracts. And then the market maker says, the bullion bank says, because it's OTC, it's not on the floor. He says, how many other guys are you calling? I don't want to be the last person you're trading with here. He's like, I'm only calling you and these 3 other guys. So make me a market. And then he tells me the market. He tells the broker the market. And the broker says, okay, the other 3 guys have also made that market. How many can you do? 1,000, 1,000, 1,000, 1,000. Okay, fine. I will do 1,000 with you at a tick under your price, meaning a competitive price. But I want to give you an opportunity to hedge yourself, because they're not just selling naked. They're selling spot and buying COMEX. They're reversing their carry trades, and they're hopefully making a couple ticks. Now, the customer who doesn't give a shit about the 2 ticks, he's like, look, I don't care about how good my fill is. I care that I get all 5,000 contracts or 10,000 contracts or 20,000 contracts in one phone call. They want one-stop shopping, these guys. So the broker gets a 10,000 lot order. He calls his 4 best counterparties, 4 best market makers. He goes, I need 2,500 from each of you. What's your market? I'll sell it to you at this price. Okay, fine. All right. I'm going to give you 10 seconds to start buying, and then I'm going to lift you. And so the market maker, in this case, the bullion bank, has the order. He knows what the order is. And essentially, the broker has basically said to him, you can lean on me, meaning I'm not going anywhere. You can lean on me like I'm a support group. And so the bullion banks start buying in the futures slowly. They start accumulating. And when they get accumulated, it doesn't go down. It starts to go up slowly. And then when they get filled, or when they get close to filled, they'll say to the bank, to the broker who's representing the central bank, okay, I got my contracts, you're done. Now, what I would do, and I know they do this, what I would do is, if I had a position that was already going up my ass, so let's say we're talking about futures here and spot, we're not talking about options. You know, as the BIS person, that I'm short net metal. And I know that I'm short net metal. And every time I make a market for you, maybe I make my theoretic tick here and there, but my whole position goes up my ass another $1. I make $1 and then I lose $10, right? So the trade is profitable, but the legacy open interest, like a pension, is hanging around my neck and killing my profitability. And so what I will do, and what everyone does, is I'll buy a little extra. Every time I get lifted, or every time a central bank trades with me, that's the best information that money can buy. I know if that central bank's trading with me, he's trading with other people, so I have to buy 2,500 contracts to do his trade. I'll buy 3,000. And each time I do a trade, I'm spending that extra money that I'm making to close my risk, because it's one thing to lose money as a market maker, as a bullion bank. It's another to lose money and not be out of your risk. Hold on. Yeah, I don't see it. I don't see the DMs. Let me look at that in a second. All right, so I want to stop right here and take any questions that you guys have, and then I'll get into it a little bit more. All right. Where are the pictures? There they are. Does anybody have anything they want to ask about this yet? No? Okay. Oh, I'm doing a great job or a horrible job. Oh, there it is. Yeah, I am. Okay, so back to the main story here. You guys see my screen, right?
Yep.
Okay. I lost the green frame. So now we go back to, now that I've explained that whole thing, now we go back to what happened here. During this time frame, the central banks were buying gold over the counter from the bullion banks. And for every contract that the bullion banks sold over the counter to the central banks, they bought more than one on the COMEX. And so the market ramped and they lost money, but they also overbought. So essentially, if I know you're buying and I know you're going to buy again later, I'll start to buy ahead of you coming in. And this marketplace here, I believe in my heart that the OTC COMEX was, the OTC COMEX trade was bullion banks getting lifted by central banks, working with the central banks to preserve their sanity and at the same time covering their shorts. The moral of the story is during the shutdown, the central banks bought gold when no one was watching transparently, and the bullion banks covered shorts when no one was watching. Okay? That's what happened there. Now it gets a little bit more interesting. You don't have to see the numbers here. Randy, do you see the time frame that I have?
Yes.
Okay. So you have here, I'll just show you what I did. See this here? That's the word government. That's your ending of the government shutdown.
Yep.
Right? And I put one up here, that's when it started. So between this little red box and that red box, that's the government shutdown. And during the government shutdown, you had some pretty big revisions. Now we're looking at revisions. And the revisions were, 4 figures with the occasional 5 figure. And Rand, you have Fridays highlighted here, right? That's a Friday, right?
Correct.
Right.
Correct.
So Fridays seem to be the consistently biggest revision. So 24,700 on the 2nd, 9,000 on the 10th, and so on. 0 here. That must have been a bad data day. But here's, again, what's interesting. So during this time frame, you had some pretty big revisions, but nothing crazy. And you had some massive, massive moves, as I just showed you. Big up, big down. The shutdown ends here. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 or 12 days of 5-figure revisions every fucking day. You guys see that?
Lie, baby, lie.
That's right. That's right. When the shutdown ended, they probably, all these guys definitely is not the right word to use, but notice how I made a point of saying this was very orderly, right? Very orderly, and then the market collapsed. Then they threw in the towel over here. The bullion banks were budgeted to cover. Now, Scott and I will talk about this on occasion, but he can't talk right now. But essentially, the bullion banks were told, hey, we have a shutdown. You better use this opportunity to cover when you can. And the central bank said, oh, we have a shutdown. Let me buy some gold. And that whole thing worked together. Now, my guess is when the shutdown ended, they still had contracts they were told to cover. And that's why every day, no, that's not the one I want. That's why every day from the 10th to the 24th, they were revised 5 figures every day. I don't know if you guys understand the significance of that. Generally speaking, revisions don't move more than 500 a day. 500 a day. Here they are, 12,000, 16,000, 14,000, 16,000, 12,000, 16, 26, 33,000, 10,000, 14,000. And then out of nowhere, it just stops. So I would say to you that everything that we've been talking about over the years here, they're doing even more now. So I'm under the impression that the bullion banks were told to cover during the shutdown. You could, of course, make the case that the shutdown was created for coverage, but that's silly. I mean, there's all other bigger things, even bigger than gold, that are out there. Anyway, so that's it. The bullion banks were working hand in glove with other entities to close down their risk during the shutdown.
Hey, Vince,
That's
this is Iggy.
yeah.
I have a comment on this because I have my own set of data. And I
Yeah.
had calculated that from, and again, I don't know if this completely corresponds to your dates, but from Thursday, October 2nd,
Right.
through and including this last Thursday, because we don't have Friday's data,
Right.
they covered 497,000 contracts. So if you can imagine how many tons of gold, I had done a calculation on the whole year, but I don't have,
Right.
that's why I reached out to Randy to try to get data from previous years, but I don't have data to compare it with. But we were talking on the order of close to 1 million contracts net that have been, judged in that finals minus preliminary category over the course of this year. So you're talking on the order of the second largest set of gold holdings in the entire world if it were ranked on, like a sovereign, like another, if you look at a list of
Right.
countries and how much gold they have, it would be
Right.
the second greatest country to the United States of how much gold was covered during that time.
How many tons was it roughly? Do you know?
I would have to look it up again, but the 400, because I've looked it up as the 497,000, which I just did for you to keep it to your numbers, but
Right.
I also did it, and I think it was around 800,000, 900,000, but I think I had it at like 3 or 4,000 tons, something like that, and it might have been higher. So I'll tell you at the end of the year when we finish up the whole year, but it's going to be on the order of maybe 3,000 to 5,000, maybe even 6,000 tons, something like that.
Okay. Okay. So
And let me be clear, it might be like in the end, it might be 3.5 to 4,000 on the year. So don't
Right.
quote me, but just
No,
huge numbers.
So you're basically saying that during this window, you went from the beginning of the shutdown, October 2nd, to November 24th?
No. Sorry, I'm including through December 18th. If you want me to do just
No. I get it. So
yeah, if
you
you want
went
me to
from the
do
beginning
just
of the
through November
shutdown to
24th, I can do that too. I can do that really quickly. Hold on, I'll tell you.
well, but you basically, because there's been buying that came into the market and got long again. But I see what you're saying.
Yeah, let me do the other one for you because that'll be more of an apples to apples comparison. That's going to be '09. That was 400,000. So let's just say that 80% of it happened during that window that you discussed during November.
Wow.
So 400,000 happened from the beginning of October to the end of November.
Nice.
And again, I want to be clear. That's net. In other words, on those random days, and I think I don't know if there's like what, like, I don't know. I'm just looking at this. So like Wednesday,
Okay.
December 10th, it was plus 79, but that's outside our window. But my point is very few days had a positive, if any. They were
Yeah.
almost all negative. And if you did that graph that you did from Randy from like, I don't know, a month ago when we last met, it would have just been a low line, that was way below that
Right.
zero line. Yep.
I should redo that graph. Hey, Randy, do you have you don't have that graph updated, do you?
Yeah.
Do
Go
you?
to
Is it
Go
over
to-
here?
tab 4 on the spreadsheet.
Great. Let me get rid of this thing here I have.
Iggy, shoot me your email address somehow, and I will get you that data.
This one?
Tab 4, and then is it 4? Wait, no, I'm sorry, 4.2. The next one down.
Sounds good, Randy.
Yep. Then scroll down. There you go. That one. That's the differences, the revisions. And
Wow.
graphically, there were you got the anecdotal side, and you got Iggy's analysis of the numbers, and you can
Right.
see what's happening right there. The last last 10 days or so, which when the data started getting published and the government shutdown ended, and and game over.
Right. Game over, meaning we can't do it anymore. We're done. We're out of room. All right. So
This is Iggy again. Let me throw in a teaser. Because
hold
I know
on.
someone else-
Hold on. Let me catch up. The shutdown started on the 1st or 2nd, right? Of October?
Started on the 1st.
Okay, good. So there's the 2nd, and the shutdown ends on 11/12 or 11/13 or something like that.
10th, the 10th.
Right. So, but I think there's a weekend in the middle there. So 11/11 will be our first day back. And during the shutdown, which is this area here, you had a ramp up. In fact, Randy, remember the data sheet that I did, and then you added to it the original thing. What date did I do out to? I'm saying the scale has to be amazing now.
No, I don't remember.
Remember my very first graph?
Yeah.
It wasn't during the shutdown, was it? It was pre-shutdown.
Oh man,
I have it somewhere. It's pre-shutdown. All I'm saying is, see our scale here. The scale is just outrageous now. Look, 20,000, 30,000. This is crazy. And look at every day. It's like this here. That's crazy. So Iggy, you did the open interest turnover from here to here, from the beginning of the shutdown to current date. And I stepped over what you were saying. What else did you want to add?
Oh, no. It's actually unrelated, but someone had asked in the comments about silver, and I was going to say silver was really, really big, just in that Thanksgiving timeframe, where it did again. I don't think many people are following it, but I am now.
Right.
It did this. It did what is just to the right of your thing. It did that massive drop like that. Around let's say in other words, as soon as they stopped this on like the 12th, that's when it started in silver, and then it ended literally like at the end of the month, something like that. I don't have the data
Holy shit! Hold on. Check this out. Let me see.
In other words, they moved the operation from gold to silver as soon as they closed this one down.
You're right, Iggy. You're right. Watch. 11/28, which is the day after Thanksgiving.
Which is also the CME blow up day.
Right.
And I have the gold data right in front of me. They shut the gold operation down on Tuesday, November 25th. It went from, on average, 10, 50, I shouldn't say average of say 20,000, negative 20,000 a day until Tuesday, November 25th. And then we go over to silver. And then on Tuesday, November 25th, it fell to 427. And on silver.
Right. This is where the gold one ended. Right there.
On silver, it started the day before. So they had one day of overlap. Silver started on Monday, the 24th.
Yep.
And really, you could put a little bit that they started the week before on Wednesday.
But they really ramped it up when they were finished with gold.
but they really ramped it up when they were finished with gold, and they did it all during Thanksgiving week and maybe a tiny bit onto Monday, December 1st afterwards. And then most of it's been normal since, but until this week. And then both numbers have started to go up on gold and silver again this week. Right, I think it was Tuesday of this week, something like that. Tuesday or Wednesday this week.
Isn't this amazing? I mean, this
And nobody
is
knows. Nobody knows. This is
Well, and
nowhere
let me say
realm.
let me just throw this out. I don't even want to suggest that this is likely the case. I think it's probably not. So you can shoot it down. But I had speculation because you guys had done that, that last graph during the last thing. And let me be clear. I know that people, like big people, important people, and people that may not be friends are probably monitoring this group, right? And so I was a little troubled when you published that. You guys got all excited about it, and then all of a sudden this stuff shut down. And I was like, maybe they're going to change how they're doing their operation or change how they're doing reporting. I don't know.
Wait. Are you saying, you mean when I published that story?
I'm saying it's possible that your impact that you thought you were going to have by getting covered by, say, the Jerusalem Post and all these other places that are just, that it actually brought attention from the wrong eyes, and that they had to shutter how they were doing the operation and make it a little bit more, we'll say, less transparent than it was before, because even then, during the shutdown, it was clearly too transparent for the likes of us who are sitting and watching and analyzing. And again, I don't have any evidence of that. I'm not even suggesting that.
No,
was the case,
I understand. No,
I'm saying it might have been an unintended consequence of that, is that it took away that transparency for us, or it may have. But let me be clear. This week disabused me of that hypothesis, because we're starting to see the stuff come in. And on Thursday, we had negative 13,000 contracts in gold again.
When was the Jerusalem Post one that I put up?
It was like a day or two after the last Sunday talk where you guys posted the graph, and I don't remember which one that is, but it's probably at least a month ago now, because I don't think we've had these for like a month.
Right. I know. Yeah, you know what? I mean, this is not about. I mean, I'm not. First of all, let me just start by saying that's a great connection, Iggy, bridging it from gold to silver. That's a great connection, because the guys who trade silver are the guys who trade gold. Same guys.
Can I also add one more thing that just
Sure.
it's going to be irrelevant?
Can I finish?
To you.
Let me finish complimenting you.
Yeah.
Let me finish complimenting you. I appreciate it. That's really good to have a pair of fresh eyes see that, because I'm not looking at silver, and I used to look at silver all the time. That's fantastic, and applause to you for that. So yeah, thank you.
No, keep going and complimenting me. I like it.
No, we're done. We're done with
No,
that.
okay, good. So no, I was gonna say, from a comparison standpoint, I was also watching platinum and palladium, which are tiny markets, as well as copper, because I put copper into this database, and I'm monitoring it every day too. You don't have these, you don't have this. You have a tiny fractional margin of this, and it swings back positive. Some days it's positive, some days it's negative, and I'm talking about, when I say that, the final minus preliminary. Right. Just that alone, it swings back. It's a little bit. It's like,
there's more of a random walk.
Look, it's always less than, it's a tiny percentage of what's happening in gold during this entire year, but especially from the shutdown, and then in silver, especially during that thing. But yeah, I think we're going to be on the year for gold. I think we're going to be around 1 million contracts covered. So, and you asked earlier why they were likely doing this or something like that, and I didn't answer, but I was going to answer, if I'm going to be the guy in class who doesn't care whether he's wrong. I was going to answer because I think they're going long. I think they know that this price is about to go, or they're going to lead it to go longer, and so they're covering their butts so that it can go long, and they can kind of let the fishing line out a little bit. I don't know.
Yeah.
That was my
let me take it right from there. No, let me just take it right from there. No. I haven't seen the breakdowns individually, but there's a guy out there who breaks down the swap volumes by Bullion Bank. Now, I don't know how he gets them. And he says that as of last week, the American bullion banks are now net long gold. The European bullion banks are still net short. So you're right. The bullion banks are flipping. And in the past, they've rarely been long for more than 2 weeks. But when you cover this aggressively, and you've got Tether buying gold, and you've got this thing going on in Saudi Arabia, which, by the way, I got confirmation that's happening. The silver tokenized silver is happening. When you have all these things going on, and even again, I would love to take credit for the Jerusalem Post coverage being why they covered, but the reality of it is they probably have been trying to cover for a long time. The shutdown was an opportunity for them. And then when the shutdown ended, they just said, fuck it, go into high gear and cover more. And so they got back to a level that was acceptable for them. And then they got short again, and now they're buying again. I think the American bullion banks are long now, and the European counterparts are not. So I think you're right. I think everything you're saying is absolutely correct, Iggy. It's good. It's good.
I got a question, Vince, if I may.
Sure.
Is there any correlation between the drop in the market? So it dropped from the peak down to that bottom before it started coming up again. That's right in the middle of that shutdown period. Is there any correlation with the extra that the banks were buying to cover the shorts at all? Because if they were doing that and misreporting the numbers, and they're doing similar with silver, then you could potentially see similar behavior in silver as well. Just a thought.
Hold on. Let me clean my screen up and pull up a chart so I can follow you along a little better. I want to pull this up, clear my screen. You want me to pull up a chart, right? Or you want me to pull up
the one you've got on the screen there shows the peak. It was where gold topped out before it dropped and then started going back up again. But you said the end of the shutdown period's just a little after it bottomed out and it first. Is that price drop anything to do with the banks covering?
Hold on. We want to do the short-term one. Okay, so let's work with this. All right. Does this show what you were looking to see?
Yeah. So
okay.
The yellow line.
Are you referring to this area here?
Yeah. So from the peak there, it drops. Yeah.
Yeah.
Is that anything to do with that covering that the banks were doing?
Yes. Look, if I'm to go back to that story I told you and how it applies here, if I know that there's big buying by let me get that pen set up right again.
So you said that they bought extra, yeah?
Yeah, that's what I'm getting at. What I'm getting at is
right. Okay, so
if I get lifted,
my point.
Yeah, I'm sorry.
So to the point that they flipped to silver, and we know that the banks have been short silver, very much so. Right. Is there a possibility that you could see the same kind of dynamics unfolding in the silver market?
Yeah, you can, and it won't be just like gold, but there is an aspect to it that's very similar. But understand that when the bullion banks are short, their profit center was just leaning on the longs, and when the longs collapsed, they would start to cover in the sell-off. They buy some, and depending on how long the longs were and how much they had to puke, they would cover a percentage of that. And then sometimes they would just let it drop because they were in a strong position. There was no physical demand. So silver and gold, but silver we're talking about here, silver would drop and then roll flat and then drop again. And then at the very bottom of silver and gold, you would see the open interest go up because the bullion banks were covering and some macro discretionary guy would come in and buy as well. And the funds would start to sell, get momentum short, and that will be the bottom. Now, the reason I say that is because this would take this configuration I showed you that goes like this, down, sideways, down, up, right? That took place over 2 weeks. Okay? Then they started to go like this. I'm just going to anecdotally tell you what I see observationally. This became this, and then it became this, and then it became this. So what does that mean? Well, it means that there's buying, right? Now, I'm willing to say this. I'm willing to bet on this. It means that the tactic that banks use to cover shorts is the same as it has ever been. When they're selling, they buy it. How long it stays down is a sign of how confident they are. So in silver, what are we getting? We're still getting those smashes, those Mr. Slammy things, but they're V-shaped on an hourly chart now. They're not lasting long at all. So the banks are doing the same thing they always do, leaning on the market at a particular moment, or when they see a seller come in, they'll front run it a little bit to get it going, kind of get that snowball going downhill, but they're catching it a lot more aggressively. The knife isn't dropping as much anymore. Does that so what I'm saying with my observations in the silver market recently, it corroborates that the same behavior is going on. But there's no central bank buying, and I think the BIS is also helping them out a little bit. Does that help you a little bit? Does that answer a little bit?
Yeah, no, for sure. It's just interesting to understand the dynamics, how these behaviors actually drive price action.
Right, exactly. And when you think about it, like when you say how these behaviors drive price action, this is the roots of technical analysis. Why is there a long wick? Why is there a non-confirmation? Because the bullion banks are not competing with other people to buy. You're getting these changing market structure dynamics. Yeah, that's a good observation. What else should I pull up? Randy, where were we? We were looking at this one, right? Oh, here's something else I want to show you. Here's something I want to show you. Take a look at this to give you an idea, like how ridiculous it is. When we had show you there's no correlation between the frequency of revisions and the volatility of the market. When we had, okay, so this looks like a normal correlation, right? Small revisions, small moves. Bigger revisions, bigger moves, right? Okay. All right. Biggest, steepest move, and here's your revisions, right? So you could arguably say that this all makes sense. Bigger revisions, bigger moves. But then you get in here and the market's going nowhere and the revisions explode. That is the bullion banks covering. That's what's going on.
Vince
That's
Iggy,
it. So,
Vince Iggy again.
yeah.
I just posted in the chat there. I did calculations while you were explaining all that. I did calculations for year to date,
Right.
the shutdown period, and then since the shutdown period. And I used October 2nd, which is the first full business day
Right.
after the shutdown. In other words, the first day that operations started, and then through Thursday, which is the day we have data for. So not including Friday, and I'm expecting Friday they covered again.
Is that this? Is that this chart here?
That's exactly that. So they've covered 835,000 contracts in that open interest,
Right.
and they did 250,000 during just in that 6 weeks of shutdown, and they've done 500,000 roughly, just a little bit less than 500,000 since the shutdown. What, 2.5 months ago?
All right. So I want to ask you a question so I can refine the definitions of your words so we're on the same statistical page. When you say contract shut down, you're not saying open interest closed, are you?
Okay, so let me step back. As far as
Yeah.
the dates, it's from, let's say, January 3rd or whatever it is until this past Thursday.
Right.
The shutdown is the period of, say, October,
First.
2nd or 3rd or
Yeah,
whatever.
yeah.
Well, no, I think they announced it on, starting that day, but the operation started the next day, the very
Right.
day after they shut it down. So I
Right.
started from the day that the operation started on October 2nd or
Right.
whatever through November 12th, which is the official thing that I checked it out on what the date was, through November 12th.
Right.
Okay, so I included that data. And by the way, the operation still continued after November 12th, which is why I did a since shutdown data, which is from October 2nd
Right.
through this past Thursday. So that's
It actually grew since the shutdown. Right.
immensely.
Right.
But since the end of that December contract, give or take, right? We'll just say Thanksgiving week. It's been back to 2025 business as usual, which is that Monday, Tuesday, Wednesday, generally no big deal. Thursday, Friday, five-digit contract covering. And so now to answer your specific question that I think you asked about the pink numbers are the number of contracts. It's the differential of the final, which is released the next morning, minus the preliminary that was announced at, let's say, 2 a.m. or
So this is total revised contracts.
total revised contracts for the whole year. We're almost up to
Total revision. So it's like taking, when I use Randy's chart, taking all Randy's changes and adding them up.
Yes, and let me just say this: it's what you've alleged may be fraud, right? Where these people just have a couple drinks on Friday, kind of thing, and then whoops, they report on Monday, kind of thing. It's those only those.
Right. Okay.
In other words, it's the shady stuff that doesn't get reported. We have 835,000 shady revisions, out on the whole year.
All right. So hold on. I want to stay specific on. Thank you. I appreciate this. So 800. I'm going to use very specific words. I know you're a statistician. So 835,446 contracts year to date have been revised net down. Right.
That is correct. And that, again, that's on balance, right? That includes all the updates.
I understand. It's a net. Right. All right. So here we go. This happened during the shutdown. And you're telling me this happened after the shutdown. This is not
No. Let's be very, very clear. That has been from the beginning of the shutdown until today. You can subtract to get since the shutdown. And
got it. So the shutdown has 254.
200,000 roughly.
Right. So this is
193,000, something like that.
Right. This is the total since the shutdown started. Right. So it's 254,000 during the shutdown and about 183,000 since then. But the time frame is smaller. It's a shorter time frame. It's fucking crazy. This is bad. Okay,
let me say it slightly differently. So we had 254,000 from the beginning of October to mid-November, and from mid-November to mid-December, we've had 193,000.
Right.
In the last month. So in other words, during the shutdown, it was 6 weeks, and they were covering at a rate of, what is that? I'm just going to guess 180,000 a month.
Right.
And since then,
let's do this together. Let's do it by week. How many weeks in the shutdown? 6?
Something like that. Yeah.
So 6 into 250, 6 times
40,000. 45,000, something like that.
45,000. Okay, so let's call it 45,000. And now how many weeks post shutdown?
Just guessing 5. 5 into 193, you're talking 39,000, something like that. So
right.
In other words, it hasn't really changed. It's dropped by, what is that, 10%?
Right, but net, what you're looking at is before they got done, they had a number to cover, and they were covering that during that time frame, and that's what they did. That's it.
And what's different now is the total daily open interest contracts. As of Friday, we're estimated at 490,000. In the shutdown region, we were in the vicinity of 450. So we're at a minimum 50,000 net, from start to Friday. But in between there, it went all the way down to 418 on December 2nd for open interest. So what they're doing now is open interest bottomed at 418,000 contracts December 2nd.
Right.
Now they've got the volume to cover.
Randy,
now they've got their bullets. They've got their bullets again. Is that what you're saying?
Yeah.
I see your volume argument, and I'm going to raise you, right, by the fact that our future for Thursday and Friday, our future volume, again, not open interest, right?
Right,
But futures volume is down to 258,000 on Thursday, and then
Right.
181,000 on Friday, right? And back when we were talking about this during, those times, we were up anywhere from, 350 to 600,000 futures volume. So they've really run it in on the futures volume, but they're doing this, again on Thursday. They had a discrepancy, outs, almost 13,000 contracts outs on
Right.
258,000 in total futures volume. So they're doing this now on very, very, much smaller volume.
Right. The volume is dropping, and the percentage is going up because they're still doing the same volume. Right. I hear what you're saying. So Randy, let me see if I understand what you're saying here. You're talking about during this upswing.
Right.
How does that relate to the bullion banks? You're saying that they
don't
reloaded
have
their
to.
guns?
They don't have to make the revisions now. They've got enough.
Oh, yeah. Okay, yeah, I get it. So there's no more problems. Meanwhile, the market is fucking moving again, and the open interest is rising, and there's no more problems. Right.
Yep.
Yeah.
It's all gone under the dam and under the bridge, and now they got enough volume to cover what they need to cover and or buy, and nobody knows anything.
You know what? Remember this? Remember this one? It might be on this one. Is it on this one? The open interest. Yeah, here it is.
Dropped
Here it
with
is.
the price rising.
Right. This one, in case you're not familiar with it, the market went from here to here, and the open interest went from there to there. And I know there was a little spike in there, but the point is, we know what was going on during here. This was during the run up and the aftermath of the what did he call it? Liberation Day, the whole tariff thing. And so the market rallied from these guys covering their shorts. And that's what happened here. And so the reason I'm bringing this up is because after this happened, it was back to business. Remember, Scott and I would talk about that. It's back to business. And they were making markets again. It's like their positions would get too big, they'd shut them down, and they go back to business. Now, there was one other time where the open interest collapsed, but the market went up. Was there? Or was this was the big one, I think.
That was the big one, yeah.
That was the big one, right? Right. This is what we started to see. Guys, for those of you that haven't been here long, when we first started doing this in like 22, we would see this. We would see it's all scrunched up here, but the idea is this. Open interest goes up, market goes up. Open interest goes down, market goes down, right? And then a little bit later on, open interest goes up, market goes up. Open interest goes down, market goes down less. A little bit further down the road, it's like open interest goes up, market goes up. Open interest goes down, market goes sideways until we got to this disaster here in 25. And this is where it happened. I think what we just saw is a mechanical liquidation of the bullion banks by the bullion banks with the central banks involved somehow. Central banks do loan. Understand this. Central banks will loan gold out. This is a way of loaning gold out. Do you understand that? Central banks will loan gold out. And this is a way of doing it. So if I'm a COMEX, if I'm a gold trader and I'm short New York and I'm long London, well, I'm loaning gold out. I have the gold in spot and I'm loaning it on the COMEX. I'm doing my carry trade. So when a central bank says, I'm going to buy COMEX and sell spot, they're letting them take it back. The point is the central banks are helping these guys survive. This is crazy. I mean, I don't think what we've done is specifically the reason for it, but I'll tell you this, Iggy. When when a little bit of light is shined on these things, you can best be assured that the risk manager says, hey, there's these guys that are talking about it. I don't want this in the news. You better take care of this now. That type of shit happens all the time. It happened years ago, I think, it happened with Zero Hedge and the virus. They were talked about it at the anyway. That's it.
I got to go.
Yeah, I gotta go too, guys. Any
Yeah.
questions before we go?
Yeah, Iggy asking, just to bring us full circle, right?
Yeah.
Where do you see? Because to me, this ascending triangle that's happening, and we're starting it from a much lower base in both futures volume as well as having all these people covered and possibly being long. I
Right.
assume that likely portends that we're going to have a pretty big breakout. You know, I don't know,
Yeah, yeah.
maybe not as big as coming out of August, but doesn't that
No.
likely suggest that we're going to have a breakout going from this?
Let me interpret the data in a slightly different way. And then Richard, I'll answer your question as well. Okay. Um, I'll give you the bullish and bearish interpretation. I agree with you, but I have to give you both sides of the story, right? So here we are, where the open interest is cratering and the market's going up. And now the open interest is going up precipitously and the market's barely moving. So I'll give you an example of what I'm talking about here. If I can draw a rectangle. Yeah, all right. So from here to here, the open interest dropped from there to there, and the market went up from here to here. Now, I'm not interested in up or down. I'm only interested in the total notional, right? So the market went from here to here, this measured move right here. All right. Now, the open interest went back from here to here, and the market went from here to here. Arguably, I'm looking at this saying the ratios are pretty similar. What's not similar, Iggy, so that makes me say yes, where the market is behaving properly and the next leg higher could be a lot bigger. What is not encouraging, and it's only in the last 4 days, because this is what I've been focusing on. This open interest ramp from here to here, market didn't really do much. You follow me? And the bullion banks are probably selling it again. The question is, are they just flipping or are they setting up for something bigger? So look, either the bullion banks are in the know and there's something much bigger coming, and there is. There's just not something much bigger coming on a schedule that we can understand. Or they're just getting told to shut down and then they reload. Told to shut down and they reload. It's not like they're losing money doing this now. I don't think they're losing money anymore. I think they're doing this and making money because their deal desks are getting so big from it. Almost like the market making is customer service. Do I think we can have a bigger move just based on these observations? Well, it seems pretty commonsensical that the bullion banks aren't covering because they're bearish. You know, the question is, are they covering because there's a news item coming, or are they covering because they're just not able to stay short anymore? So in either instance, the funds are making money. And I would have to say that it's not unheard of in trading for the banks to lose money in commodities and the funds to make money. It just doesn't happen in metals, at least not until recently. So that's my take on it. Does that help a little bit?
Sure. And I would also temper it with the you're dumping water on my hypothesis, or
Yeah.
it's not really my hypothesis, but on the bullish hypothesis by saying, hey, they may want to let it up just like with silver a little bit at a time or they
Okay.
may just want to allow silver to go do what it's going to do. So they only focus on silver right now, managing its increase.
Yeah,
You know.
that's a good point. See, there's two things we're missing here. They have to be, since it's one desk that covers both commodities, essentially. Um, you have to take into account what you're saying, and you also have to take into account that we don't have the commitment of traders report for the last 2 weeks. And who the hell knows who's actually selling it when it rallies now? You know, is it the bullion bank selling again? It should be. Are we sure it is? No, we don't see the data. So it's very possible that the bullion banks are focused on silver because no one's in gold right now. And by the way, that makes sense because gold lease rates have dropped. Nobody really cares about gold, and this is just funds buying. And silver lease rates have spiked, and everybody cares about silver again. So,
And
that's
just
pretty
to
much.
clarify, then, thus, what you're suggesting, this open interest running up, is new shorts coming in just to try to cap it at this.
No,
No.
no. I don't mean to say that could be true, but I'm not suggesting it. What I'm saying is this is normal. This is normal gold. All right. Open interest goes up, market goes up. It's not steep. The open interest is steep, but the market move is not. It suggests in the short term, this whole thing, I'm looking at this whole thing here as the bigger picture. Here's the bigger picture. The bigger picture is for this conversation we're having, the bigger picture is here and beyond. The smaller picture is the open interest is going up. The market is going up. All is well. But these last 2 days of open interest going up, the market didn't really do much. So therefore, maybe in the short term, it's overbought. Now, mind you, that's the open interest going up on a Friday with the market going nowhere. How many weeks have I been saying that shit? Oh, open interest went up on Friday and the market went nowhere. That's because Fridays are the days they cook. So this open interest probably, so Randy, he's probably left. This open interest probably is really down here. We'll see on Monday.
And by the way, that
Anyway.
was the point that I was going to make to you, is that on Thursday they covered 13,000. So
Yeah.
it spiked, though, by 18,000 or something like that.
Yeah.
Yeah, it spiked 19,000, give or take, something like that on Thursday. And then 13,000 came off in those outs.
Yeah, exactly.
And
So
I'm
it's going to happen
expecting
again.
Friday to be something similar, but it went down 6,000 on Friday, the preliminary open interest day over day.
It did?
It went. The numbers I had from late Friday night or Saturday morning were from 497,000 to 491,000.
So maybe Randy's isn't updated here?
I thought that might be the case.
Well, I'd
But
have to log
we're
in.
right at on Thursday we were right at 500,000. It was 497,500. So if I don't have his graph in front of me, I have my data. But if he's not right at 500,000,
Right.
Then his data might be a couple days back.
Okay. Let me answer these last three questions here, and then I'm going to go. Richard, thank you, Iggy. Can you comment on the massive silver calls on silver futures and SLV that Dario spoke about? Does this go along with Iggy's comments? What could this indicate? Big bank bet versus hedging by someone underwater. Okay, Richard, it could be any number of things, obviously, but I'll give you what it likely is. Let me just make sure that I'm reading the data right here, because I'm looking at a lot of different venues. Dario was speaking about, by the way, Dario knows markets. He's not a silver guy per se, but he knows markets. And I can tell by the feedback he gets from his friends that he's talking to people who are in the know. So that's a good sign. His information is good. Are you saying that, what did Dario say? Did he say SLV calls?
Both were up.
Both meaning SLV and GLD, or SLV and silver?
SLV and silver.
Okay, all right. So here's a couple things that'll help you get perspective on this. The traders who make markets and options trade both venues. So and I did this, if someone buys calls for me in SLV, I will buy calls against it on the COMEX. So I'm doing an arbitrage, just like I always do, right? That's an arbitrage. There's risk involved, but there's arbitrage. So that's the dynamic. Order flow originates on either the SLV product or the COMEX. A market maker makes the market, and then he looks for a lookalike option. He's laying off his risk in options terminology. Now, if Dario says massive silver calls on silver futures, oh, I see. Silver futures and SLV. I see. I missed your phrasing there. Right. On silver futures and SLV. I would say to you that it's at least a 50% chance that one order is real and the other order is what's called a back-to-back. Okay? Does that mean it's not significant? No, it means it's more significant. Because if it's big enough to make me have to go into the other market to cover my hedge, then it's big enough. So in terms of handicapping this as a reason to be more or less bullish, it's very hazardous to handicap this as it's more or less bullish. Do not handicap it that way. Just handicap it that there is more interest. I'll give you an example. This is very common. I'm not giving you like weird exceptions. If I'm a hedge fund or a macro discretionary hedge fund, what I will frequently do is I'll be long the metal. I'm playing silver futures. And when the market rallies, I will start to sell my metal out and take profits. And as I'm getting out of my profits in metal, I will buy some calls to give me a tail. You understand that, Richard?
Yeah, I think so.
Right. So what I'm saying is it's when a market, how about this? When the gold and silver markets did not have a lot of players, I could tell you with a high degree of certainty what's going on. But now the markets become more dynamic. And so now, to give you like 3 examples, let's say the calls were bought on SLV. All right. And then they were bought on silver futures to cover the calls on SLV. That's fine. Why were they bought? Were they bought because someone was long futures and long stock and getting out and buying some calls? Were they bought because they think the market's going to go even higher, or were they just greedy? And believe me, it could be all 3 of those things. But generally speaking, Richard, this doesn't apply to silver because silver is a very special entity. But generally speaking, when calls are bought after a market's made new highs, it's generally not a good thing. You follow me?
Yeah. I mean, the interesting thing was all the calls that were bought were on SLV, I think, expired January 16th. And then for the silver were, for the March expiry. I think there were like 200,000 or more calls in the 65 to 85 range or 60 to 80 range on
good.
SLV.
So I can get very specific with you then. So you're saying the SLV calls were January, were January?
Yeah, January 16th call
Right.
options from the 60 to 80 range. I think the first comment he made was at the 70 range. There's 80,000 at 70, another 85,000 at the 60 strike, and then the other ones are kind of spread out.
Okay.
But most
I'm going to give you a very plausible explanation to complement what he's saying. First of all, I don't know if you read the post I put up this weekend, but January 17th is when we're supposed to have an announcement.
Yeah, I saw that.
Right? So someone came in. What I'm saying is someone came in and bought the SLV calls, and then someone came in and bought the March gold calls. I mean, silver calls. COMEX calls. The SLV was the origin order because of the date. I'm pretty sure of that. The March calls could also have been the origin order, but I don't think so. I think the March calls were bought by the person who sold the SLV calls. You understand? All right. Now, the reason I'm sorry?
Yeah. I got it. Yeah.
No, I'm not 100%, but I'm talking to you as a market maker. Whenever I sold a call in SLV and I had to buy a COMEX call against it, I would go to the month that had the biggest liquidity. And in silver, the biggest liquidity now is not the January option or the February option, it's the March option. So even though those options are listed, if you can avoid it, by all means, you avoid trading the January and February options in silver futures. So if someone lifts you on the January 16th SLV option, you buy a March call. If someone lifts you on the February option, you buy a March call. What you try and do is keep all your hedges in one expiration. You follow me?
Yes.
You have less expirations to worry about now. I would say this to you. I would say that the buyer of the January 16th, I can't believe it's January 16th, the January 16th calls is someone who's a very smart, very well-informed speculator. I think that's what it is. And so there is something to that. And the reason we know there's something to that is because on January 17th, the government's supposed to announce if there's going to be tariffs or not. And that completely makes sense. And that also, by the way, Richard, that also ties in with the concept of buy the rumor, sell the news. See, if I buy a call that goes off on January 16th, which I would do, something I would do. I did it for the election. I bought calls that went off the day before the election and the day after the election, thinking that whatever the market does after the election, I don't care. I just want to be able to sell the calls as the election approaches. So I think this person is taking a 2-week spec that could be a home run. Does that help?
Yes, it does.
Yeah. iPhone. I don't know who that is. I guess it's 2 Eastern time start. Okay, so that's basically it, right? You're learning a lot. Marco, if I may, on silver previsions and YouTube videos, right? Marco, I think it might be lost in translation. You mean revisions, not previsions. I believe that's what you mean. A lot of channels or guys are talking about some very diverse.
I'm looking a lot of channels on YouTube, Gold, Silver, Shackman, others name. Apparently, I don't know them. Apparently, they are professionals, but
okay,
they range.
Marco, let's discuss this privately.
Okay? Sorry, okay.
And I'll tell you, everyone is there to get views, right?
Okay.
I'm here to get subscriptions.
They are so wild. There is such a wide ranges of provision of ideas.
So I'll tell you privately.
Okay,
who I think is completely full of shit, who I think has a seed of truth, and they're just trying to make it bigger than it is, and who I think is completely honest.
Thank you so much.
I'll do that. Not right now, but I'll do that.
Don't worry. Just to understand.
There's. Again, I'm sorry.
I don't want to waste time looking at someone with strange ideas.
Yeah. No, I understand. Marco, this is the problem now. There's so much information out there, and yet there's no, what's the word? Curation. Do you know what that word means?
Yeah, I understand.
Yeah. There's no filter, and it's become harder to determine what's bullshit and what's not. Fortunately, I have a bullshit.
I'm not the only one with the same problem.
Yeah. So who mentioned Jordan?
Hey Vince, really quickly, if you're talking with Marco, you need to break out your Italian for us.
No. I'm a very American. I can only speak Italian around the dinner table because my grandparents are from.
Pasta and pizza is too easy, eh?
No. No, I mean, I'm out of practice, but I would eat dinner with my family, and my grandfather would always talk to me in Italian. Pass me the wine, dammi vino, or something like that. And it was always, uneducated Italian. So, he was from Southern Italy. But
I'm sure that a couple of weeks here, you will be great.
Maybe I should. What part of Italy are you in, Marco?
I'm north near Switzerland.
Oh, yeah?
Yeah.
Nice.
Very north.
My family probably hated your family.
Not so sure. I'm not.
Oh, I'm just kidding. My grandfather had blue eyes, so he probably would have blended in well.
You already told me. First time I wrote, not near Bergamo, near Biella. Piedmont.
A long time ago. That's right. Thank you. Thank you very much.
Merry Christmas to all of you.
Merry Christmas, Bon Nadal. Thank you very much. Jordan, someone's talking about Jordan. Merry Christmas and Happy New Year. And what day of the week is Christmas this year? Is it a Thursday?
Yep.
All right. So
are we going to meet next week in between?
I'm going to say yes. Yes, it's right in the middle. Why not? Yeah.
Okay.
We're caught up. Let's meet next week. And Steve, what is your in the chat? What is your name? Steve what?
Morgan.
Does it say Steve Morgan in the chat? Do you ever go in the
Yeah.
chat?
I'm pretty sure.
Okay. All right. All right. Good. Okay. All right. So yeah, I'm done. We're done. Let me start recording this.
What do you think happens this week, Vince? Up, down,
Yeah, I know.
slap.
I haven't done one of those